Hi everyone, welcome to my channel, where I talk about all things related to finance, investing, and economics. Today, I have a very important topic to share with you. And the reason is simple: the global financial system is built on a house of cards. A house of cards that is about to collapse under the weight of its own debt. You see, the world is drowning in debt. And I'm not just talking about the government debt that you hear about in the news. I'm talking about all kinds of debt: corporate debt, household debt, bank debt, shadow bank debt, and even central bank debt. Yes, you heard me right. Even the institutions that are supposed to manage the money supply and ensure financial stability are in debt. And not just a little bit. A lot. How much debt are we talking about? Well, according to the latest data from the International Monetary Fund, the total global debt reached a staggering $281 trillion at the end of 2020. That's more than 3 times the size of the global GDP. That means that for every dollar of economic output, there are more than $3 of debt. That's insane. And it gets worse. The global debt to GDP ratio, which measures the sustainability of debt, jumped from 320% in 2019 to 356% in 2020, the highest level ever recorded. That means that the world is more leveraged than ever before. And that's a very dangerous situation to be in. Why? Because debt is like a double-edged sword. On one hand, it can boost economic growth and prosperity by allowing people and businesses to borrow and invest in productive activities. On the other hand, it can also create financial fragility and instability by exposing people and businesses to the risk of default and bankruptcy. And when debt reaches unsustainable levels, the risk of a debt crisis increases exponentially. A debt crisis is a situation where a large number of borrowers are unable to repay their debts, either because they don't have enough income or because they face a sudden increase in interest rates or a decline in asset prices. When this happens, the creditors who lent them the money also suffer losses and may face liquidity or solvency problems. This can trigger a chain reaction of defaults and bankruptcies that can spread throughout the financial system and the economy, causing a collapse of confidence and a contraction of credit. This is what happened in 2008, when the subprime mortgage crisis in the US triggered a global financial crisis that plunged the world into a deep recession. But the 2008 crisis was just a warm-up. the next crisis will be much worse. Why? Because the debt problem has not been solved. It has been postponed. And it has grown bigger. You see, after the 2008 crisis, the governments and central banks of the world did not address the root cause of the problem, which was excessive debt. Instead, they tried to fix the problem with more debt. They bailed out the banks and the corporations that were too big to fail. They slashed interest rates to zero or even negative levels. They printed trillions of dollars of new money and injected it into the financial system. They launched massive fiscal stimulus programs and ran huge budget deficits. They did everything they could to prop up the economy and the markets, and to prevent a debt deflation spiral. But what they really did was to create a massive moral hazard. They rewarded the reckless and irresponsible behavior of the borrowers and the lenders. They encouraged more borrowing and lending. They inflated new bubbles in the stock market, the bond market, the real estate market, and the cryptocurrency market. They created an illusion of recovery and stability. But they did not create real and sustainable growth. They did not create real and sustainable wealth. They only created more debt. And more risk. And now, we are facing the consequences. The global economy is still weak and vulnerable to shocks. The global financial system is still fragile and interconnected. The global debt is still unsustainable and unpayable. And the global pandemic has only made things worse. It has triggered the worst economic downturn since the Great Depression. It has exposed the weaknesses and inequalities of the current system. It has increased the social and political unrest and instability. It has forced the governments and central banks to double down on their debt-fueled policies. It has pushed the world to the edge of a financial abyss. And the worst part is, no one is talking about it. No one is warning you about it. No one is preparing you for it. The mainstream media, the politicians, the experts, the influencers, they are all silent. They are all in denial. They are all complicit. They are all part of the problem. But you don't have to be. You can be part of the solution. You can be informed. You can be aware. You can be prepared. You can be resilient. You can be ready. And that's why I made this video. To tell you the truth. To show you the facts. To give you the tools. To help you survive and thrive in the coming crisis. In the rest of this video, I will explain in more detail how the global debt crisis will unfold, what will be the triggers and the consequences, and what you can do to protect yourself and your family. I will also share with you some of the best opportunities and strategies to profit from the crisis and to build your wealth in the new era. I will also answer some of the most frequently asked questions and common misconceptions about this topic. So, stay tuned and watch this video until the end. Trust me, you don't want to miss this. This could be the most important video you ever watch. This could be the video that saves your life. The global debt crisis is a situation where the world's total debt, which reached a record high of $281 trillion in 2020, becomes unsustainable and unpayable, leading to a wave of defaults and bankruptcies that can cause a collapse of the financial system and the economy. There are several potential triggers and consequences of this crisis, as well as some possible ways to protect yourself and your family and to take advantage of the opportunities and strategies to profit from the crisis and to build your wealth in the new era. Some of the possible triggers of the global debt crisis are: a sharp rise in interest rates, which would increase the cost of servicing the debt and make it harder for borrowers to refinance or roll over their debt. This could happen due to inflationary pressures, monetary policy tightening, or a loss of confidence in the creditworthiness of the borrowers. A sudden drop in asset prices would reduce the value of the collateral and the net worth of the borrowers, and make them more vulnerable to margin calls and forced sales. This could happen due to a burst of bubbles in the stock market, the bond market, the real estate market, or the cryptocurrency market, or due to a geopolitical shock, a natural disaster, or a pandemic. A contagion effect, where a default or a crisis in one country or sector spreads to other countries or sectors, through trade, financial, or currency linkages. This could happen due to a lack of coordination or cooperation among the creditors and the debtors, or due to a failure of the international institutions or mechanisms to provide adequate support or resolution. Some of the possible consequences of the global debt crisis are a severe recession or depression, where the economic activity and the income levels decline sharply, leading to higher unemployment, poverty, and inequality. This could happen due to a contraction of credit and demand, a disruption of trade and supply chains, or a deterioration of fiscal and external balances. A financial instability or collapse, where the banking system and the financial markets become dysfunctional, leading to a loss of savings, investments, and access to finance. This could happen due to a liquidity or solvency crisis, a run on the banks or the markets, or a breakdown of the payment systems or the currency regimes. A social and political unrest or turmoil, where the public trust and the social cohesion erode, leading to protests, violence, or conflicts. This could happen due to a rise of populism, nationalism, or extremism, a breakdown of the rule of law or the democratic institutions, or a surge of migration or humanitarian crises. Some of the possible ways to protect yourself and your family from the global debt crisis are: reduce your debt and increase your savings, by paying off your high-interest or risky debt, and by building an emergency fund and a diversified portfolio of low-risk or inflation-protected assets. This could help you to avoid default or bankruptcy, and to preserve your purchasing power and your financial security. Increase your income and skills, by seeking new or additional sources of income, and by upgrading your education or training. This could help you to cope with the income shocks or the job losses, and to take advantage of the new or emerging opportunities or sectors. Strengthen your network and community, by maintaining or expanding your social and professional connections, and by supporting or joining local or global initiatives or organizations. This could help you to access information, resources, or assistance, and to contribute to the social and economic recovery or transformation. Some of the possible opportunities and strategies to profit from the global debt crisis and to build your wealth in the new era are: invest in undervalued or distressed assets, by identifying the countries or sectors that have strong fundamentals or growth potential, but are facing temporary or solvable challenges, and by buying their stocks, bonds, or currencies at a discount.